And good morning, everybody. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, and hopefully making money trading Forex. Sometimes we do, sometimes we don't. And that I do want to throw out there is that this is not a buy and hold kind of situation. This is if you're new to Forex. This is something it's a skill that requires years of experience, and sometimes I wonder if I've developed those skills or not after 30 years of looking at this stuff. But this is the first time I've really got into it diligently and made it part of my of who I am and my career, so my business career. So let's get into the risk disclaimer, because I live in the United States, and I have to do this according to the CFTC. Since we are talking about real trades and the real prospects of making money, we also have to talk about the real prospects of losing money. So that's where we go with this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. Don't do what I do unless you know what you're doing. I am a professional trader, or trying to be, and not a broker, trading my own capital. I'm also involved with a prop firm called AUDUSD Capital out of London. I'm in a challenge with them trying to get to the funded stage. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. This is the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, carefully consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So that's what I used to have to say when I was a broker. When I used to have a NFA registration, was this part down here, the risk disclosure. I had to kind of weave that into my spiel and just occasionally throw out there, hey, Forex trading carries a high degree of risk, but you can you can make a lot of money too. So I'm going to take my broker hat back off, because that's probably one of the things that's been the biggest thing holding me back as a trader, is thinking like a broker. It's thinking, oh, I gotta trade. Nope, that's exactly what the brokers want you to think. I know, because I used to be one. Let's see, I was a very unsuccessful one too, because I was working in a firm in South Florida, and I couldn't sell little old ladies on $40 oil calls when oil was trading at 28. And that was the straw that broke the camel's back that day. That I walked out of my first office. Okay, so let's get back into the real world now. This is what we're doing today. This is the euro versus the dollar. That was back when you used to use these things called telephones to call people all day long. Let's see. This is the euro versus the dollar. This is where we're going with it today. Finished right above that the first one deviation Bollinger Band right there, if you can see that clearly, and getting into this sell region. So it looks like may have we got what have we got coming up this next week? Rate cuts, possible rate cuts. FedWatch says we have let's refresh, 92% chance, 93.4% chance of a 25 point rate cut, small chance of a 50 pip rate cut. So it looks like we're guaranteed a rate cut according to the Chicago Mercantile Exchange, and we just don't know how much yet. It could be 25, off chance it could be 50. Don't see 50. Not with the way that the Fed governors are pushing back. Let me see. And I'm not so certain that that's going to be the best thing for the economy either, but we shall soon see. Nobody ever calls me and talks to me about these things. So let's get back into the euro. So since we're looking for a rate cut, the dollar will be losing ground. We'll have a weakening dollar and a soaring euro, provided they don't have too many more riots over there on the what do you call it, on the fundamental side. So maybe not. Maybe if it stays within this range here, we'll just keep trading the technicals, because I can't predict the fundamentals at all. So however, this is technicals tend to show a repeat of buyer-seller behavior. So we will see if we can't get that. If that comes in here, got some widening Bollinger Bands, that might be approved to look like a better trade on big bullish on the euro versus the dollar. The yen versus dollar versus the yen's right here. This is what this looks like. It's closed right at the top. So again, could be a weakening going into a selling pattern, but we're a long way away from that, especially with that pin. The pin, I don't like Friday pin candles because it's I don't like giving them too much attention because it's in really light volume. So that's not really necessarily what is. You got to take volume into account too when you're looking at pin candles. And our side closed at 52.98. Again, not touching that one. You can see our ATR is way down here. Average true range is way down here. So 40 pips. That's not much. So let's see. What's going to happen? Who knows? We're going to do that tomorrow. We redraw our lines, our trend lines, to see what's going on, because this trend line has just been completely blown to hell. It's also flat right here at 135.94. The 136 range is looking like a really tough range for the British pound. But then again, look at this. The 135 range is looking pretty bad too. So it looks like it's going to get this 100 pip range until rate cuts. So we'll see what happens with that, in which case it'll blow through 136. That may be what it's setting up for. Pound versus the dollar. Pound versus the yen. This is looks like it could be a lucrative trade. The problem is it is so, what do you call it? Volatile that you can have a winning trade 1 minute and then have a losing trade the next if you think the pattern's going to run. I have yet to develop a system to make this trade profitably. It did close over 200, so that is a good idea. Might be a good idea to get into it. Then again, it might be a better idea to get underneath it, because it's usually when the pound yen gets into the 200 range, is a pretty sharp reversal lately, unless it finally decides to break through. Dollar versus the CAD. This one is pretty hard to predict. This is also right in the middle of the Bollinger Band, so that's a no touch on that one. The possible entry level would have in the long term, but look how volatile that pattern would be to get to from here to here. To get 70 pips, you'd have to pretty much walk through fire to get through 70 pips, and that's would be a tough trade to do. My hat is off to you, those of you who did make money trading the dollar versus the CAD. It's probably a lot of different trades. Oh, look at that pretty pattern right there, right in the middle of its 4-hour resistance, and then it breaks out and it comes right back down. So we may have a new range coming up on this one. That is a really pretty pattern right there, right in the middle of those. That's almost textbook. I like that. You should pay more attention to the Aussie, because it just took a step back, and instead of looking at the price action over here, is looking at the entire price action right through here, and that is just textbook. Sell at resistance, buy at support, and vice versa, over and over again. That's fantastic. However, that's not as clean as it always looks. Hindsight is always 20/20. You can always know what happened after it happens. 36.42 gold again. Not really having the rate cuts. If we do have a rate cut on this, I'm going to treat this like a currency pair. So you've got gold on this side and the dollar on this side. If we have a rate cut, dollar's going to lose value, and the gold is going to go up. So the denominator goes down, everything else goes up. So we've got a weak high here at 36.74. They want to get into a gold trade about 36.61 Sunday, if they don't already try to price it in. It's priced in already sometimes, but if we get a 50 pip rate cut, it's going to pop. How do I know? Let's look at silver. Silver held 42 yesterday. Very nice holding pattern right there for silver at 42. Silver has not been at 42 since, I think, during COVID. I think it spiked to 50. That was like a one-day spike, and it was right back down. This is a pattern that has been going on since 2021. So I was buying silver. When I was buying a lot of my coin collection, replacing a lot of my coin collection, it was in 2021, 2022. And gold is trading around $16 an ounce. Yeah, there we go. That's 2025. It was as low as 32. Let's get out of go to the daily on this one. See if we can make that a little bit better. Let's we can find out when it was. Yeah, here we go. This is when I really started buying my coin collection back. Well, no, that's not. $2023. It's kind of monthly. But just a couple of short years ago, it's Henry talking to the other birds. Henry the, no, that's 08. Oh, in 08 it was trading at 16. And dropped back down to $9 an ounce. But yeah, it was holding pretty much between $16 and $17 an ounce until COVID, 29, and it was financial crisis, great financial crisis, or there shortly thereafter it spiked to 2011. It spiked to 49.83. So that is the top that we will be looking at right here. I'll get back into a chart that looks like it makes sense right here. And here we go. So that's what silver looks like. Not, it's impressive if you've already got some. I've already got some. I've got a pretty substantial little coin collection. Like to make it bigger, but it's again I don't have the time to pursue it right now. And it got more expensive to pursue now too. So we'll see how that goes. I may buy a coin in a couple of weeks. I'm eyeing one from the U.S. government mint. But at any rate, let's get into the prop trading section. I'm going to show you what happens with the prop trading section. You do not have any challenges yet. They're not showing my challenge anymore. Trading contracts or trading accounts. Yeah, let's look at this one. This is what happens when you fail. I went over the max loss limit right here. So max loss limit is $1,500. I went to 1502 because I had two losing trades going on and I had left the office. There's nothing I can do to get out of it at that time, and I can't. DX Trade is horrible on your phone. I've yet to, and they don't have an app, so I failed that one. However, I do have this one over here that's still working. I may go over how to search for a prop trading company later. And here's the day I was going to sit home and trade the account back and forth and make lots of money. And that's exactly what happened. I had some of my biggest losses. My biggest loss ever to date was that day. Max daily loss, 419. That was that day. So my max daily loss, well, current is 0. I didn't trade yesterday. It says profitable trading days. I had 6. They're looking for 2. Target 4. I've got 15. So 6 out of my 15 trading days have been profitable. I need to work on that a little bit. So that's where we are on this one. Consistency score is now under review. I guess I need to get profitable first, then the consistency score comes into play. So I'm kind of good, I guess. 64. I guess they want more of a 98 or something like that. I guess it's out of 100. I've got a threshold. I need to be over 50. Got it. Okay, but I need to be profitable first. So this is the first one, and then all that rest of that will come into play if you do it right. So this is where I've lost money. I'm down 419 on this account. Now I need to be up 1,500. So we're going to be working on that this next week and seeing if we can get some good trades in. In the meantime, I've got to go to my day job. It's always good to have a day job if you're going to trade Forex or have an alternate source of income, especially if you're just getting started. So with that, I'm going to let you go. And tomorrow we'll have a big, long one on reevaluating the markets and seeing what's going to happen next in a rate cut environment for the U.S. dollar. So you guys have a great one. I will talk to you later. Bye.